In this video, we're going to dive in and discuss the yield you're going to get from your marketing efforts in the world of land investing. Unfortunately, there's tons of misinformation when it comes to the expected yield you're going to get from your marketing efforts in the world of flipping land. Hi guys, my name's Sumner Healey. I run a business called thelandpioneer.com. In the last 18 months, we've done a little over $2.2 million in raw land sales on the internet. I make these videos to document my journey and hopefully help others along the way. Now, if you've been in land investing for any amount of time, you'll hear people talk about maybe a 1% or 5% either response rate or acceptance rate from their direct mail efforts. And when I first got into this space, I thought, well, that's probably the expectation, right? If all the gurus are saying I can get that much from my mailers, why am I not seeing that? And so what we're gonna do here is we're gonna discuss real life examples from our mailing campaign last month. We did 10,500 pieces of direct mail, and I've got all the data here to go through it with you. Now, before we go through those numbers, I need to preface something. In our business, we're going after quality pieces of vacant land. We're going to the market and looking to really capture equity on all the deals that we buy by buying at a true discount. And we're working in areas that have tons of demand and potentially tons of competition. Now, I break up this business into two different categories for properties. You can go after what we call like the desert squares, right? These cheap little lots that you can buy in abundance. You can buy them for very cheap. Most owners want to get rid of those things. So the acquisitions of those properties are very, very simple, but the dispositions or the actual selling of those properties are quite difficult. You're typically dealing with someone that's very low on the socioeconomic totem pole in terms of potential buyers. You're dealing with people that have never bought vacant land before, and you typically need to generate an absolute boatload of leads before you get someone that's qualified to buy those kinds of properties. So the way we view it is it's easier on the acquisitions, it's much harder on the dispositions. Now, on the flip side, you can go after and buy true quality pieces of land in markets where there's a plethora of demand. The trouble is the acquisition side of things are going to require a whole heck of a lot of marketing before you can get a deal. For us, we look at anywhere between 2,000 to 2,500 pieces of direct mail before we'll get one single deal that we'll buy. But the beauty is on the back end, the actual selling of these properties, it's a whole heck of a lot easier because you're buying a quality piece of land that people want. You're buying it at a discount and you're selling it at a discount. Now, I've worked in both areas of this business, but currently the majority of our efforts are going after these larger deals. Now, I don't mean larger in size, but I mean larger in terms of purchase price and larger in terms of selling price. Because in markets where there's demand and there's folks that really want this land, the price is going to go up. So these are typically not properties that are under $20,000 in regard to an acquisitions price. So I just want to get that out there. If you are going after smaller, cheaper type properties, then these numbers are totally different than what you can expect from your mailing yield. And one last preface, we're talking about direct mail in this video. We do use other marketing channels in our land investing business, but direct mail is still the bulk of what we do. So in June of 2022, we sent out 10,500 pieces of direct mail. We use a blind offer. That simply means that we're sending out a two-piece letter. The front is going to have kind of our sales copy, and then the second page is going to have an offer price with an actual purchase agreement. Now, there's other offer types you can use in this business that will increase your response rate, but we found this is the most efficient way to get deals done, just because you're presenting a price right on the front end, so the people that are not interested, odds are they're not going to call you, and ideally the folks that do reach it out have some level of motivation because you've already set expectations in terms of what you're looking to pay. So from 10,500 mailers, we got 48 total leads. Now, we qualify a lead as really just anyone that's reached out that doesn't tell us to go F ourselves, just someone that said, hey, I may or may not be interested. Maybe they don't love the price, but they still reached out to us. Some of these folks call the call center that we work with. Some of them will send us a written letter back, or some of them send us an email. Now, some of those leads are going to include signed purchase agreements, and some of them are just general inquiries. That translates to a 0.0045% response rate. Now, I wish I could say that all 48 of those leads were deals that we're going to buy, but for some of those folks, we just simply couldn't agree on a price currently, or the property is actually not something we would even want to add to our portfolio. Here's where it gets really interesting. Out of that 48 leads, we only had 5 deals that we closed from that campaign. That translates to a 0.00047% acceptance rate. Now, that's a whole heck of a lot lower than the advertised 1% or 5%, and we send out hundreds of thousands of pieces of mail per year, and these are the reoccurring numbers that we see time and time again. Now, truth be told, in some markets, you're going to see different response rates, different acceptance rates, but when you blend it all together, you're typically going to be within that same range. You might be saying, geez, Sumner, you need to find a new marketing channel. That's freaking terrible. Well, hold on here. This is actually where it gets interesting. Let's dive into the real math in terms of cost and then what that generates on the back end. So roughly with data and the mailing cost, it's about $5,985. That's all-in costs. That includes the paper, that includes the postage, that includes the data. So just a hair under $6,000. But here's where things get really interesting. That 10,500 pieces of mail that cost us about $6,000 added a little over $120,000 in pipeline profit. Now, not all these deals have sold yet. At the time of this recording, it's August 2nd, but I've been in this business long enough that when we comp properties, we have a pretty clear understanding of what we're gonna sell it for, and we typically apply a bit of a discount rate to it just to be cautious. So it could be a hair over $120,000, or maybe it's a few $1,000s less, but we know for certain it's somewhere pretty tightly clustered within that range. So when you zoom out and you look at the fact, well, hey, we spent about $6,000 for the direct mail marketing, and that translated to about $120,000 in gross profit for the business. I don't care what response rate I'm getting or what acceptance rate I'm getting. I just like that math. That's why I'm such a big proponent of looking at your land investing business in terms of ROAS, return on ad spend. Now, a lot of people like to obsess on the ROI per property, or they spend a lot of time looking at the response rate or looking at the acceptance rate. To me, all that stuff is baloney. What I care about are dollars in and dollars out. So hopefully what you see from this video is a lot of the numbers that are touted by the gurus in the space are totally wrong. It's hogwash. But that's okay, because the math still pencils beautifully. If you can stick $6,000 into a marketing engine that spits out about $120,000 in gross profit, well, you've got a really reliable business. And that's why I'm still such a big fan of direct mail. Yes, we do utilize other marketing channels within our business, but there's nothing as consistent as direct mail. And it does get costly. And I'm not gonna lie, it does get costly. But if one of those 5 deals sell, we've already replaced the entire cost for the marketing. And then from there, it's just profit rolling in. So I hope this video helps you guys. I hope this gives you some context in terms of what you can expect if you're just starting out in land investing, or maybe you've been in the game for a while and you're kind of beating yourself up saying, God, my numbers are not as good as they should be. Look, I'm in the same exact boat as you guys, but if you're going after the right properties, if you're building out the correct offers, it really doesn't matter what your response rate is or what your acceptance rate is. If that math pencils, you should be doubling down on the marketing. If you guys like this video, I would love it if you could drop a comment down below. Let me know what you liked or what questions you have. Give it a thumbs up if you thought it was decent. And if you guys want more free land investing content, we've got a huge pipeline of videos dropping. So be sure to subscribe, and I'll see you guys in the next video.